The Monetary Policy Committee of the Reserve Bank has decided to keep interest rates unchanged at 3.5%. Xolani and Mbanjwa, our business editor, staying with us, joined now by Mukoki, the CEO of the South African Chamber of Commerce and Industry, representing business in this conversation. Alan, good afternoon to you. Your reaction. Would you have preferred there to be a cut by the bank today?
Well, yes, of course, because we're taking a lot of pain. Good afternoon, Stephen, to your listeners as well. A lot of businesses are taking a lot of pain purely because the revenues have not showed up. We've been in this particular lockdown, so any relief measure by way of any input costs that can go down, whether it's energy costs, whether it's interest rate costs on borrowings, would have been a welcome addition. So as far as we're concerned, yes, there was an opportunity because we're not necessarily dealing with inflation issues at this point in time where the monetary authorities like to use interest rates to try and control the heat in the money supply space. We have a very serious problem now with the COVID-19 lockdown, and businesses are really struggling. And we have to do everything in our power to try and ensure that we don't see too many businesses shutting down. 51% drop in GDP is something quite big, and we may well end up having to see that bloodbath in jobs being lost over the next 3 months, and that is something that will not be sustainable for the economy.
I mean, in the end, you're saying, never mind monetary policy, we need to keep people in business, and this needs to be the focus, the national focus, perhaps.
That is the most important thing, because these things are all interrelated, you know. So if you want to control inflation, you are going to have to be able to do it when there is a problem with inflation. Right now, your problem is not inflation. You are trying to avoid having a situation that looks worse than a recession, which is a depression. So in that particular context, we are going to need to be a little bit more flexible on policy options and be innovative in the way in which we know the things that we can do, where those things can actually be done. It's not just a question of sitting there and wanting to create a conservative outlook about everything, because you deal with a problem when it is there, but there is a much more larger, bigger problem looming as we speak. And you know this, quite a number of the businesses that have actually closed down during COVID are not actually coming back. They are never going to open ever. So we don't want to have that serious situation that will affect the fiscus in the final analysis, because the revenues will be down from a SARS point of view.
Mr. Mukoki, please put it into perspective for us. You, as the South African Chamber of Commerce and Industry, have actually been dealing with business confidence in a number of guises, talking to your members. Let's look at the past couple of months since the beginning of April. What are businesses saying to you, and what are they going through? Obviously, from what you are saying, this is a lost opportunity where this would have been another relief.
Yes, absolutely, because, you know, for most businesses, they had to deal with the situation as it is presented, and no one was responsible for that. The COVID-19 pandemic is something that came from nowhere, and everybody has had to adapt. But in the final analysis, you and I know exactly how businesses are run, right? We look at sales, and then you deduct from those particular sales the cost of goods sold, and then you go for the general selling and admin expenses. So in the normal course of business, many businesses, right, more than 50-60% of businesses, when you look at the GSA line in the income statement of where the costs go, they tend to go to people. They tend to be related to staff-related costs. So therefore, there are only two ways of running a business. You're either going to attack revenues or you're going to attack costs. There are not too many options. If you want to survive, we now know that the revenues are not coming. So therefore, people are going to focus on costs. And one of the easiest costs to look at, and I'm not saying that this is what must be encouraged, but one of the ones that are easy to look at is, well, you know, let's get rid of people. And you don't want to have an economy that is struggling, beginning to shed more jobs, because those jobs are very critical. Many people misunderstand. They always assume businesses just want to go after labor. It's not in the interest of business to go after labor, because in the final analysis, you need to have the markets to which you are able to sell your product and your service. You need to sell more airtime. You need to sell more kettles, bricks, cement, and you are not going to be able to do that if people are not employed. So for many business people, having high levels of employment is a boon for their businesses. Now you have this situation that you have right now. So what are you going to do? You're either going to try and survive and save your business, and therefore you're going to look at all those costs. You know, there are costs that you can take out that are easy because they're within your control. There are costs that you can't. You're not going to be able to do anything around your bank borrowings or supplier relationships because you need them to survive. So therefore, costs around staff, you're going to take them out because, well, right now, I don't have the revenue to be able to sustain those kinds of costs. So we have to avoid that kind of a situation. So a relief measure that doesn't actually deal with the issue of the input cost to the business person creates a problem. We said exactly the same thing with the 200 billion. Yes, it is a good additional measure that ought to be there, but the reason people are not actually taking it up is a very simple reason. You are not going to go and incur higher levels of leverage or gearing on your balance sheet when you don't have any idea how you're going to pay back. Because you say I must go and borrow 10 million, 20 million to put back into my business. The specificity of that particular loan guarantee has to do with you being able to pay operational expenses as a result of the drop in revenue occasioned by COVID-19. So now you have this cost, borrow money to pay for this cost, but the revenue that you lost in the last 5-6 months is never ever going to return. What you're going to end up with is a balance sheet that looks very, very unfavorable to you. The fact that the government is giving you 6 months, and we had the president yesterday saying you will have a 12-month repayment holiday, does not mean that interest is suspended for that particular period. You're just being given an opportunity not to pay.
Mr. Mukoki, it's a strong point to end on. Thank you very much indeed. Really do appreciate
Thank
it.
You so much.
Mukoki is the CEO of the South African Chamber of Commerce and Industry. Xolani and Mbanjwa staying with us as well, our business editor.